Have you heard you need to be rich to invest in real estate? Yeah, probably. Well, so did I. Let's bust that and a few more myths wide open. Because if I'd had listened to half the shit that people said about real estate, I'd still be working overtime, clocking in every day, hoping for that pension to hold steady and my thrift savings plan to hold me off until 65 or so when I was able to retire. The truth is, most of what people believe about investing is just plain wrong. And all that misinformation is costing folks their freedom, their future, and their financial peace of mind. So today I'm calling out the BS, the biggest myths in real estate investing, and I'm going to show you how to replace those lies with real, usable knowledge. Hey, if this is the kind of content you've been looking for, real talk, no BS, hit that like button, subscribe to the channel. All right, let's dive in. I am Bud Evans. I'm a retired Air Force officer, retired cop, a full-time real estate investor, and I help military veterans and first responders create real wealth through smart, system-driven investing. I've underwritten a whole bunch of deals. I helped a lot of people get into real estate, and I built 3 rental portfolios using a combination of the Burr method, strategic flipping, and good old-fashioned hustle. I have properties in New Jersey, Western Pennsylvania, Ohio, and we're getting ready to expand a little bit more. So I've been burned, I've been bounced back, and now I coach others so that they can skip all the landmines and mistakes, build real, sustainable cash. So let's talk about myth number 1. You need to be rich to invest. This is the BS that stops people before they even start. They think real estate is only for the wealthy and that you need a big inheritance or a trust fund or some tech money to play in the space. And that's absolutely not true. Wrong. I've helped a lot of people start with just a few $1,000s. I've personally done deals with zero money out of pocket. And I'm not talking about magic, I'm talking about math. I've even written a balance transfer check from a 0% credit card to buy a flip. You don't need to be rich. It's not that you lack resources, it's that you need to be more resourceful. And you need to learn how to structure deals that make sense to all your stakeholders. Hey, when I started out, seriously, I didn't walk in millions. I used leverage. I coach about using VA loans to house hack. I've used flips to generate chunks of cash, rolled those profits into multiple bird deals that I held for long term. And that's the model that really helped me scale. See, flips gave me cash, and that was great. But Burr gave me equity and cash flow. Working together, they can build 3 distinct portfolios across those multiple markets. And you can build for equity, you can build for cash flow, but the one that I like is the one I built to fund future acquisitions and help me retire and make a lot of money. So we're going to get into more of that in a later video, but for now, I want you to know this. You don't have to be rich. You just have to think like an operator and a business owner. Here's myth number 2. You need 20% down to buy a property. All right, let's put a bullet in this one next. That 20% rule comes from traditional lending, and yeah, conventional loans, they usually require 20%. But if that was really the only path, most of us, including me, probably would never have gotten started. There are low down payment and zero down options that are completely legitimate. Like, for example, if you're a veteran, the VA loan is a monster advantage. With zero down, competitive rates, no PMI, then there are FHA loans, which let you get in for 3.5% down. You got to house hack both of those, where you live in one unit, you rent out the others, or you live in one house, you buy a bigger one, you rent out the rooms. You can use these loans to build wealth while you're living in the property. But hey, that's just the beginning. I've done bird deals where I bought the property with private money. That's somebody investing in me. I renovate it, I rent it out, I refinance, I pull it out, all of the capital, sometimes even more. I pay them back their money with interest. I have zero money left in the deal, and the property cash flows from day one. And that's the power of strategy over savings. The bottom line here is don't get stuck thinking that 20% it's the law. It's not. It's just what all the banks want you to think. We're going to get into velocity banking. That's really going to blow your mind. Myth number 3 is you have to invest where you live. No. If I had believed this, I would not have built the other portfolios. I live in New Jersey, and I do like living here. I'm very close to the Poconos. I'm very close to the beach. I love the state. The numbers just don't work here for rentals all the time. I mean, I do have some rent in South Jersey, but there are high taxes here, high prices, and when you have those two, you wind up with low returns. Now, I do buy in Trenton, and I buy in farther South Jersey. I started looking outward here. I bought in Pennsylvania, in the suburbs where homes were affordable and tenant demand was strong. I bought outside of Cleveland, where you can still find properties under $100,000 that rent for $1,300. In the suburbs of Pittsburgh, where small multifamily properties give you great economies of scale, I bought there too. I've got some single family and I've got some smaller residential multifamily. But here's the thing. There's one thing that you need to do to invest out of state. You need systems. You need contract. You need a property manager. You need a real estate agent or someone who's going to source you those deals. And you need a really good attorney. And guess what else? Standard operating procedures, SOPs, that make your portfolio run like a business. And you can self-manage in Cleveland from South Jersey. I own units that I've never even seen in person. I've done, no kidding, a FaceTime walkthrough of the building because I built remote systems that let me lead the team without being the team. So don't let your personal zip code limit your net worth. And speaking of systems, real estate is risky. So let's talk about it. If you're having issues figuring out your systems, you can use programs like FlipperForce. And with FlipperForce, you can analyze deals like a pro, whether it's the flip or the buy and hold or a burr property, whatever strategy you want to do with, whatever exit strategy you want to deal with. You can estimate your rehab costs accurately so you never blow your budget. You can plan your project schedules from start to finish and stay on track. You can even track your expenses in real time in the program so there are no financial surprises. More importantly, you can create professional reports for your private money lender or your potential partners to get your deal to the table. And last, you can organize all the photos and documents, keeping everything in one place. It'll even do Gantt charts for you and keeping you on a timeline. Flipperforce really streamlines your process. It's going to save you time and keep your business running smoothly. I've used it for flips and BRRRR deals and rental property analysis, and it's been a game changer. I even use it for comps. If you're ready to see for yourself, do me a favor, click the link in the description below, sign up for a free trial. You're going to get 30 days free and then 20% off when you do sign up for the program. It will save you time and money on all of your projects. So, real estate is too risky, right? This is myth number 4. Well, let me ask you something. Is it risky to buy a rental property with cash flow, tax benefits, and physical appreciation? Or is it riskier to rely on one paycheck, one job, or one retirement system for 30 years? Let's face it, you get a job, you work your ass off, you retire, you think, you got a 401k, it doesn't cut it, so now you got to work until you die. Real estate done right is a calculated risk. When you run the numbers, and you run the numbers before you buy, you can verify tenant histories, you can get inspections, you can build reserves, you can write contracts that protect you. My leases are 20 pages long. It covers just about everything. Most people fear real estate because they don't understand how to de-risk it. I don't even know if that's a word, but I like it. But you can hedge the downside by sticking to a smart buy box, knowing what you want, managing your expenses, and never chasing a deal just because it looks sexy and you get hit in the feels. I mean, trust your gut, but run the numbers. The numbers are the numbers. That way you're not gambling. You're building a machine that prints money month after month. And if you treat it like a business, not a lottery ticket, well, guess what? The risk becomes manageable. Myth number 5 is that you have to do everything yourself. This one burns people out because they think, if I'm going to invest, I have to be the landlord, the bookkeeper, the maintenance guy, the leasing agent, blah, 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 blah. Nope, not true. Your job is not to do all the things. Your job is to build the system. Don't be the guy who knows the guy that gets stuff done. I've managed properties myself. Heck, I own a property management company. I've also built a property management company after getting burned by one that tanked my occupancy all at one time. So I've been on both sides of the fence. Let me tell you what I learned. Here's the lesson. Even if you're managing today, build it like you're going to hand it off tomorrow. I just got done updating my SOPs this morning. Create documentation, create checklists, set expectations with tenants. If you have a virtual assistant, make sure they have guidelines to follow that are hyperlinked on an SOP document. One big document, and they know exactly where to go. Because when the time comes, and it will come, to hire a manager or scale your company, you're already going to have the infrastructure in place. And if you hire a property manager from day one, that's fine. Just understand that you need to vet them like they're going to be handling your retirement, because they are. Don't go it alone. Don't go in blind either. Be the leader. Don't just delegate. Trust, but verify. Sometimes you got to herd the cats a little. Myth number 6. I'm going to wait until the market comes down. The market is never perfect. Waiting is the biggest wealth killer of all. I wish I would have bought in 2012. People wait for the crash. They wait for the dip. They wait for the prices to go back to those 2012 levels. It's probably not happening. And while they're waiting, other investors like me are buying this stuff, holding on strong and for the long term, and building equity. The truth is, there is no perfect time. Santini Lancioni was talking about it the other day. He said, BRRRRs are nothing more than a long-term flip. We want you to get the right deal at the right time using the right strategy. In my career, I've bought in up markets, I've made money. I bought in flat markets, I've made money because I stuck to my numbers and I didn't speculate. These are not the commodity market. This is real estate. We want to flatten the curves. Smart investors buy based on fundamentals, cash flow, rent to price ratios, tenant demand, and the good exit strategy. If those things are solid and locked down, the deal's going to work regardless of what CNBC said. So stop waiting, start analyzing, knock it off with the analysis paralysis, and take action when the numbers line. Myth number 7, I love this one. I see so many gurus who talk about this crap. So let's just kill it now. Real estate is not, I repeat, real estate is not a get rich quick scheme. It is a get rich for sure if you stick with it in the long-term game. I've had flips that put money in my pocket fast. Sure, I've lost my ass too on a flip. But what's the real wealth? It came from holding the property, from refinancing them, taking some cash out, from the actual cash flow, from watching my properties double in value over 5 years while tenants paid down the mortgage every month. Appreciation, tax benefits, cash flow, and then the tenant mortgage paydown. And if you want overnight riches, go play the lottery and the redneck retirement program, because that's not going to work. But if you want real wealth and you want real options and you want time freedom, strap in for the long haul. I built my net worth one deal at a time. Yeah, great. I bought 5 at once. Doesn't matter. Some were BRRRRs, some were flips, some were just straight up bought from cash. I had flips. I just bought straight up buy and hold rental. But each one added a brick to the wall. And now that wall supports my life. But it wasn't built overnight. Anyone who tells you that you're going to make $1 million in a year in your first year is absolutely ridiculous. I mean, you could. I mean, it's almost impossible. But stay in there and you'll get here too. Myth number 8, you're going to need to be an expert when you start. When I started, I didn't know shit. I didn't have it all figured out. I didn't have all all the spreadsheets or the gonculator or any of that sexy stuff that you see. I didn't have Flipper Force at the time. I didn't know how to underwrite a 20 unit deal, but I went out and I did something that most people don't do. I got a mentor. Again, Laura Fine. God bless you. I love you. She told me one thing that stuck with me to this day. Take action. And now that you got your deal, don't stop looking. There's another one coming. Guess what? That advice was gold because I got my first deal. And then, because I didn't stop looking, found one on Craigslist, found one on Facebook, 2 more in the same month. Then I didn't stop. I kept going. Learned from my experience. I learned from my mistakes. I learned from falling forward. And speaking about falling forward, look, if you need some help, I've made a lot of mistakes that I don't want you to make. So now I help veterans and first responders get into real estate investing. And if you have any question about any of the stuff that I talk about, please, before you jump in, reach out and book your free call at budevans.com and let's talk about how you can get started. And we can talk about systems because you know what? Over time, from my mistakes, I built better and better systems. I ran better numbers. I made better decisions, but I didn't wait to become an expert before I took action. Because you know what? I've been in this for 6 years. I'm still not an expert. Stuff still comes up. You don't have to know everything. You just have to know where to start. Learn as you go, refine as you grow, and don't let not knowing enough be the reason you stay stuck. If you find something and it's not working, improvise, adapt, modify, overcome. If any of these myths have been holding you back, now's the time to flip the switch. Real estate is one of the greatest tools that we have to build long-lasting wealth, but only if you actually get into the game. So if this helped you shift your thinking, do me a favor, hit the like button, subscribe to the channel. Let's make sure that you don't miss the next mic drop because I'm giving you everything I wish I had when I started. And as always, until the next time, aim high.